Hello everyone! Welcome back to my channel. I hope everything is well on your end. Today's video is all about the tax in Canada. So let's start this informative video. But wait, before I start, subscribe to my channel. Have you ever wondered about the impact of high taxes in Canada, especially for new immigrants? It's a question that's more pertinent now than ever. When we talk about taxes, we often think about them in terms of percentages. But those percentages translate to real dollars that can significantly affect the quality of life for many individuals. In Canada, taxes are a fact of life. They fund essential services like healthcare, education, and infrastructure. But at the same time, the high tax rates can pose a significant burden, particularly on those who are just starting their life in this country. Imagine the challenge of a new immigrant who, while trying to find their footing in a new environment, also has to grapple with the complexities of the Canadian tax system. There's the federal income tax, provincial or territorial taxes, and let's not forget the goods and services tax, or GST, which is applied to most purchases. But it's not just about understanding the system. High taxes can also mean a tighter budget for many households. It can mean less disposable income for things like leisure activities or even essential items. For a new immigrant who may be starting from scratch, this can be a daunting reality. However, it's not all doom and gloom. Yes, the tax rates in Canada are relatively high, but it's also worth noting that the country offers numerous tax credits and deductions, which can help to alleviate some of this burden. For example, there are credits for individuals with children, for students, and for those who are self-employed. Moreover, Canada has a progressive tax system, which means that the more you earn, the more you pay. This system is designed to be fair, ensuring that those who have more contribute more. So while high taxes can certainly pose challenges, particularly for new immigrants, they are not insurmountable. With careful planning, understanding of the system, and by taking advantage of available credits and deductions, it's possible to navigate this complex landscape. Indeed, high taxes can pose significant challenges, particularly for those who are new to Canada. But remember, they also contribute to making Canada a country with a high standard of living, strong social services, and a sense of community that's truly priceless. Now let's delve into the different types of taxes that one might encounter in Canada. First up, we have the income tax. As the name suggests, this tax is levied on your earnings, and it's a progressive system. That means the more you earn, the higher the percentage of your income you pay in taxes. But don't worry, there are tax credits and deductions available to lessen the burden. Next, we have the sales tax. There are two types, the goods and services tax, or GST, and the provincial sales tax, or PST. The GST is a federal tax of 5% applied to most goods and services sold in Canada. The PST rates, however, vary by province. Some provinces, like Ontario, combine these taxes into a single harmonized sales tax, or HST. Then we have property taxes. These are imposed by local municipalities to fund services like garbage collection, public schools, and road repairs. The rate is typically a percentage of the property's assessed value. And let's not forget about payroll taxes. These include contributions to the Canada Pension Plan, or CPP, and employment insurance, or EI. Both employees and employers contribute to these funds. Lastly, there's also the corporate tax, which is charged on business profits. Just like with income tax, there are federal and provincial rates, and they vary depending on the amount of income your business generates. Each of these taxes impact the residents of Canada, particularly new immigrants. For instance, understanding income tax can help you budget more effectively, while being aware of sales tax can affect your day-to-day purchases. Knowing about property tax is crucial if you're planning to buy a home, and understanding payroll taxes can shed light on deductions from your paycheck. Understanding these taxes can help you navigate the Canadian financial landscape more efficiently. In recent news, Canada has introduced a new tax, the carbon tax. Now let's dive in to understand what this carbon tax is all about. The carbon tax is essentially a fee imposed on the carbon content of fuels. It's an environmental tax that aims to reduce carbon dioxide emissions by making fossil fuels more expensive. The idea is simple: the more you pollute, the more you pay. This tax is not exclusive to Canada. It's a global initiative being adopted by many countries as part of their efforts to combat climate change. As we all know, climate change is a pressing issue that requires immediate attention and action. The carbon tax is one such action, a step towards a cleaner, greener future. But what does this mean for the residents of Canada? Well, it essentially means that anything associated with fossil fuels could become more expensive. This includes things like gasoline for your car or natural gas to heat your home. So yes, it might pinch your pocket a bit. Now, for new immigrants, this might seem like an additional burden. When you're trying to settle into a new country, every penny counts, and an additional tax might not be the most welcoming news. But here's the thing, the revenue generated from the carbon tax is not just disappearing into thin air. The government is using this money to fund various programs, including those designed to help households offset these costs. For instance, in many provinces, households receive climate action incentive payments. What this means is that you could get a rebate on your tax return, which can help cushion the impact of the carbon tax. So, while it's an additional expense, there are systems in place to help manage this. It's also worth noting that the carbon tax encourages more sustainable practices. It might prompt you to consider more environmentally friendly options like using public transit more often, or perhaps investing in energy-efficient appliances for your home. So, in a way, it's nudging us all towards a more sustainable lifestyle. In conclusion, the introduction of the carbon tax is a significant development in the Canadian tax landscape. It's a step towards a sustainable future, and while it might seem like a burden, remember that there are measures in place to help offset these costs. So let's embrace this change for our pockets, yes, but more importantly, for our planet. Surviving in a high-tax environment like Canada can be challenging. So how do we navigate this? It's no secret that taxes can feel like a heavy burden, especially for those who are new to the system. But don't worry, there are strategies and tips that can help you manage and navigate these high taxation waters. Firstly, understanding the tax laws is crucial. Taxes in Canada aren't just about income tax. There are various types such as property tax, sales tax, and the recently added carbon tax, each with their own rates and regulations. The more you know about these laws, the better equipped you'll be to manage your finances. Secondly, financial planning is your best friend. It's important to budget and plan your finances around your after-tax income. This means taking into consideration the amount of income left after all taxes have been deducted. By doing this, you can live within your means and even save for the future. Another tip is to make the most of tax deductions and credits. Canada offers various deductions and credits that can significantly reduce your tax bill. For instance, there are credits for charitable donations, medical expenses, and even public transit use. So, always keep track of your eligible expenses. Finally, seeking professional help can be a game changer. Tax professionals are up to date with the latest tax laws and can guide you on how to maximize your deductions and credits. They can also help you avoid penalties and interest by ensuring your tax return is filed correctly and on time. Remember, it's not just about surviving high taxation, but thriving despite it. By being proactive, informed, and strategic, you can navigate the Canadian tax system effectively. While high taxation might be daunting, with the right strategies, it is possible to navigate this challenge effectively. Let's wrap up what we've covered today. We started our journey by examining the impact of high taxes. We recognize that high taxes can pose significant challenges, especially for those new to Canada. It can be a steep learning curve, but it's one that is navigable with the right knowledge and resources. We then moved on to understanding the types of taxes in Canada. From income tax to the goods and services tax and provincial sales tax, we dove into the nitty-gritty of these fiscal obligations. Each tax has its own unique characteristics and impacts, and understanding these is key to managing your financial responsibilities effectively. A major point of our discussion was the introduction of the carbon tax. This is a new addition to the Canadian tax landscape, aimed at reducing carbon emissions and encouraging more sustainable practices. While the intent is noble, it does mean an additional financial burden. But remember, it's not just about paying more, it's about contributing to a healthier planet. Surviving high taxation was our next focus. We looked at strategies to manage and potentially mitigate the impact of these taxes. Planning, budgeting, and understanding where your money is going can make a world of difference. It's about being proactive, not reactive. So there you have it. A whirlwind tour of the Canadian tax system, the challenges it can pose, especially to new immigrants, and some strategies for handling these challenges. Remember, understanding and navigating the tax landscape is crucial. Stay informed, plan ahead, and when in doubt, seek professional advice. Thank you for watching, and we hope this information proves useful to you.